Nolan, good to see you. I'm glad you have time to talk today because I really wanted to talk through this recent market volatility. Concerns about a cooling U.S. economy led to a market rout in early August, a little bit of volatility still now as we record in early September. And I want to ask you about that volatility as we take a look at this chart from FinViz, which shows the S&P's performance for the past 3 months. We still see red, some other colors on the board. What do we need to know?
So thanks, Erin. The most important things I think to know with this chart is this is representative basically of all 500 of the stocks that comprise the S&P 500. The biggest names that you see represent the biggest share of the S&P 500. And over the past 3 months, which is what this chart shows, you'll just see that some of the bigger names that we're all used to investing in, like Google and Microsoft and Nvidia and even Amazon, haven't necessarily had a very graceful end to the summer. We're picking this 3-month period really this year because the third quarter in a calendar year is usually the weakest, but you run into routes like this with specific sectors, and that's what we're running into a little bit too.
Okay, so I'm glad you brought up, kind of the market cap size, because that does lead me to our next question, which is about concentration risk. And we've talked about it before, Nolan, where right now, essentially 82% of the movement that we see in the S&P is due to only 10 stocks.
Yeah, and that's, Erin, like you said, like concentration risk. And this is really the risk that so much of the market is allocated to so few companies as far as growth and declines. When you see, this year through August 31st of 2023, these 10 stocks propelling the S&P 500 that much, that just means that the scale can tip very easily in the other direction, and you just need to be wary of it. So we've spoken about it a little bit before. It's called concentration risk, and it is the risk that your money is focused in maybe too few companies, or too few companies in your portfolio are providing the majority of the gains. It's not to say that it's bad, it's just to say that it's risky. So if you are a risk averse investor, you may want to choose a different route.
Right. Which is funny because when we invest in the S&P 500, you think it's 500 stocks, which it is, but it's not necessarily diversified, which is why I want to ask about diversified portfolios. How have they been holding up during this recent volatility?
A lot of diversified portfolios during this recent volatility have undercut a lot of the losses. When you talk about diversified portfolios, you're trying to take a good mix of stocks and bonds, asset classes of different risk type, instead of 100% stocks. Now, stock portfolios on a year-over-year basis typically do quite well, and that's why we do recommend that people keep stocks as the majority of their portfolio in most situations. However, being diversified means maybe you have a little bit of bonds, maybe you have some CDs, maybe you have some insurance, and these portfolios help alleviate some of this risk. So if the market goes down for a 2 or 3 or 4 month period, the majority of your money is intact at the other side of this.
So, Nolan, this is a little bit funny, but when all of this was happening in early August, I happened to be on Google and I typed in, should I? And the first option on my dropdown was sell my stocks right now. So clearly people were feeling anxious, but what should we be keeping in mind when we hear these headlines?
I think a good practice when we hear these headlines is to understand investment fundamentals and to understand maybe what to react to and what to ignore a little bit. So, when you see these big headlines and maybe some of these big companies are doing poorly over the short term, you really do need to think, okay, what's the long-term impact of this volatility? Do I expect this company is going to do poorly? Or can I stay, I guess, invested for the long term and tolerate some of these? With headlines in particular and with the election coming up and should I sell my stocks, it's just raising questions. Everybody's situation is quite different. I mean, some very risk averse people may want to sell some of their riskier positions because they've just done so well over the past couple of years. So take every situation individually, treat every situation individually. And if you need help, you can always call us.
Which is better advice than going to Google the day of. Nolan, if somebody does want to give you a call to talk this through, how can they reach you?
Sure. So they can call 616-301-2581, or they can go to our website. It's cornerstone-rp.com, and there's a contact us box at the bottom of the homepage.
Great. Nolan, thank you.
Sarah.